I now hand the conference over to Mr. Divakar Pingle from Christensen IR. Thank you, and over to you, sir.
Thank you, Raymond. Good afternoon, friends. Welcome to the Q1 and FY21 earnings call of Neuland Laboratories. To take you through the results and answer your questions today, we have with us the management team from Neuland, represented by Suchet Davaluri, Vice Chairman and CEO, Saharsh Davaluri, Joint Managing Director, and G.V. Bharadwaj, DGM Finance. We have sent out the press release as well as a detailed presentation, and the same has been uploaded on the website as well as exchanges. You could take a look at that, or in case any one of you wants it, we could mail it to you if you write to us. Before we start, I would like to say that everything that is said in this call, which reflects any outlook for the future or which can be construed as a forward-looking statement, must be viewed in conjunction with the risks and uncertainties that we face. These uncertainties and risks are included but not limited to what we mentioned in the prospectus and subsequently in annual reports, which you can find on the website. With that said, I'll hand over the floor to Saharsh, who will basically give you highlights of the quarter gone past, and then we'll throw open the floor to Q&A. Saharsh? Saharsh, you there?
Divakar, am I on?
Yeah, you're on. Please go ahead.
Okay, thank you. Good evening, friends. First of all, I would like to inform all of you that we're taking the call remotely. So Suchet and I are in different locations than our team. So my apologies in advance if there is some miscoordination or a delay in response. But we do have good lines that are connecting us, so I don't expect us to have any issues. But I just wanted to give that disclaimer up front. But again, good evening. Warm welcome to all of you joining this call. Like always, I will first touch upon the business highlights of the quarter that has gone past and some of the key highlights of the financials, after which we'll open the call for the Q&A session. I'm not going to call out individual numbers for the quarter. Please note that a detailed presentation also has been sent to you and posted on our website and the exchanges. So this should give you a lot of color on the operating metrics and other data. Going forward, we plan to continue updating this with more data as required. But please do give us your feedback so that it will help us in being more transparent and make life simpler for you to analyze our business. Before I begin, while we think that all of us have become more familiar with the pandemic situation, there is a continued surge in numbers from across the country. So we do hope all of you are keeping safe and are observing all the practices to fight this pandemic. So coming to the numbers, I did give you a brief outlook in the last quarter call itself in response to a question, and we are glad that the quarter has panned out as expected. Despite challenging conditions, we turned out in revenue of about 206 crores, which was the highest ever by Neuland in a quarter in our history. This translated to a revenue growth of about 13.5% over the past last physical quarter. And sequentially also it's a 6.4% growth. And I'm pleased that the growth has been driven by all-round performance, both in the GDS as well as the CMS segments of our business. EBITDA at about 34.4 crores has shown an improvement of over 80% compared to the first quarter of last financial year. And percentage terms, it was about 16.7%, which is also in line with our expectations. The effort from our perspective is to move the portfolio mix towards value-added segments in the years to come, and CMS will continue to play an important role. I would like to highlight that the work being done by our teams on cost optimization, which is also contributing towards the improvement in margins across the business. Quick word on what's driving the business in each of the product segments. Prime growth has been largely driven by mirtazapine and labetalol, while a varied number of products have contributed well in the specialty segment. We believe that the focused attention that is being given to each product in our portfolio in GDS will help us continue to grow this business. On the CMS front, the key highlight was the dual growth from both existing products as well as products which are in the development stage. So now you would have seen that in slide number 9 of the presentation, we've started to show a split of commercial revenue versus project revenue. and we think it's a very simplistic way of giving you a color of our CMS business. The very nature of this business is evident when you look at those charts, especially when you look at it over the past 8 quarters. So you can see that there is a quarter-on-quarter volatility, but when you look at it on an annualized basis, you're able to see a clear picture, and you're also able to see progress, which is something that we've been also alluding to in all our past conversations. I do urge you to go through the presentation where all other metrics, including, the number of CMS projects, the split across different segments, etc., are mentioned, along with the balance sheet numbers and the ratios. So with this, I would like to throw the floor open to Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Sudhir Beda from Right Time Consultancy. Please go ahead.
Good afternoon and congratulations on super set of numbers. Hello?
Yeah, please go ahead. Yeah, you're audible.
Yeah. See, there are some question on my part. One is how much growth is led by...
Question because you're not able to hear anything on this side.
Hello? Now, am I audible? Hello? Hello?
Yes, sir, we can hear you. Mr. Saharsh, Mr. Sid, can you hear us?
Yeah, now we can hear you. Was there a question in between? Did we miss hearing it, or was the line blank?
No, there was no question in between, Suchet. This is the first question.
Yeah. Sir, now, am I audible? So, I'm asking this question. So, sir, how much this GDS business is led by price increase due to China problem? And the second one, growth. Hello?
Go ahead, sir. You're audible.
And the growth in CMS business is somewhat tepid. Hello? Hello, so if you can answer my first question, what is how much growth is led by a price increase because of China problem in as far as GDS is concerned?
Raymond, can you just check whether the management line is got disconnected?
No, Diwakar, we are here. There seems to be a lag in between. We can hear you now, but it was completely blank in between.
Yeah. So now, am I audible? Hello. I think there is some problem with the management line.
We are here.
So can I ask question now?
Yeah, please go ahead. We can hear you.
See, as far as growth in GDS is concerned, how much it is led by increase in the price because of China import problem and problem with the China import. So that is my first question. So please. Hello.
Sir, Suchet, are you there?
Yeah, Diwakar, now we can hear you. Why don't you just try it one more time? I've just asked the office to connect us on the cell phone as a backup option. So even if we're not able to answer this way, in 2-3 minutes we'll try to connect through a cell phone. But right now we seem to be hearing you, so please go ahead.
I think the question I think that the participant is trying to ask is on the GDS business, how much of the business has seen any kind of price advantage due to the China situation, if I heard him right. So
yeah. That is my first question. Hello.
I think you just guys need to wait. I think, Sir Suchet, we just can't hear anything from your side.
Hello, there is some problem in connectivity, I believe.
Just hang on there. Just hang on, sir. 1 second.
Yeah.
We're just connecting them through a cell phone. I mean, this is on a landline. The landline is giving trouble. I'm hoping that the cell phone works fine. Please, yeah.
Yeah, I'm just holding on.
Well, thank you for patiently holding your lines. We've connected the line on a different line. You may go ahead, sir.
So now, am I audible? Yeah. So my first question is, sir.
Yes,
Hello.
please go ahead.
How much your growth is led by increase in the price due to China import restriction? That is our first question.
Okay, can you ask your other questions as well?
And sir, is that margin what you have reported in the Q1? Is it sustainable? And can you throw some longer term outlook in your CDS business, CMS business?
Good. I think, thank you for your questions. In terms of our overall sales, revenues, as well as our margins, they've been largely unaffected by the China situation. So for us, the primary situation that we faced from China is managing the logistical issues and maintaining continuity of supply of raw materials, but we haven't had any issue in terms of any significant price changes, either on the consumption side or on the sales side. As far as the margins for Q1, they do reflect our business as usual, and notwithstanding any significant unexpected changes, we do expect the margins to be sustainable.
Thank you. We'll move to the next question. The next question is from the line of Sajal Kapoor from Unseen Risk Advisors. Please go ahead.
Hi team, good afternoon and congratulations on this robust performance and a very detailed investor presentation along with a very positive management commentary. So thank you for that. I have a few questions. So regarding this recent addition and qualification of a third-party CMO for our sterile APIs, which is indeed a very strategic move for sure. So is this supporting our CMS pipeline or specialty GDS, and when do we expect to go commercial using this third-party CMO?
Actually, when we qualified this third-party CMO, it was not done specifically with an intent only for GDS or the CMS business. It was done with the intention of making sterile APIs. However, currently the APIs that we're making at the third-party CMO are for the generic space. And one API, we're already seeing commercial orders come through.
It's for the specialty segment.
Yeah, no, I got that. Yeah, so thanks for that update. So basically, we have qualified this CMO using immediately for our specialty APIs on the GDS front, but the same facility can be used if and when required for our innovator synthesis pipeline, right?
That's correct.
Yeah, okay. And second question is, so over the years, Neuland has had a very immaculate regulatory compliance track record, starting 1997. But now that we are developing and manufacturing more some very complex chemistry like the sterile APIs and other complex APIs and the peptides as well, what are we doing to ensure that we sort of stay ahead of the curve as far as US FDA, PMDA or any other regulatory audits are concerned? Because in recent days, what we have seen is some of the API manufacturing units have been under US FDA scanner. So now that the complexity of our business has increased manifold, what incremental steps are we taking to just stay ahead of the curve and not be sort of challenged by any of these stringent regulatory audits? Thank you.
I think it's a valid question. Alluding to what you just said, I think one of the reasons why we've had a good track record with the FDA is because we've always put the culture of quality and compliance as a number one priority. I think as we added products and as our facilities became more multi-product in nature, we ensured that these procedures, the overall culture of compliance, the training and development, updating those regulations and incorporating them into our quality management system were always done in a way which was very proactive so that we could continue the track record. So we continue to do the same thing, and we've been regularly inspected by the FDA almost since about 1997, and then in 99, 2002, and since then we've pretty much had an inspection every year, and sometimes it's been more frequent. So we believe that we'll need to keep that high level of awareness, keeping ourselves updated, and ensuring that our culture of compliance doesn't get compromised at any time. So it's an ongoing effort. I don't think we can ever sit back and say that everything is hunky-dory and in a strong position. I think we will continue to have that healthy level of paranoia in the system.
Yeah, that's reassuring, Suchet. And lastly, our margins have been steadily recovering over the quarters. And given our strong focus on complex APIs and custom synthesis for innovator molecules, which are higher entry barriers, higher margin play, what could be an aspirational operating margin over a medium term of, let's say, 3 to 5 years? Any broad brush guideline? Because now that we are into more complex APIs and custom synthesis for innovators, the margins should increase from here on. So we have been recovering, but what's the sort of aspirational target over the 3 to 5 years?
Yeah, so this is Saharsh. I think as you rightly indicated, as the business mix improves, we have more CMS coming in, specialty APIs improve, and even on the prime segment, as we continue to make cost improvements, we will see improvements happening first at a gross margin level and then later at a EBITDA level. That's something that has already started to happen, and as we've seen over the years, we've also had ups and downs in our quarterly performance, largely determined by the kind of mix we've had in that specific quarter. Two things we could say over here. One is we expect the business mix to continue to improve, largely driven by CMS as well as specialty, but also very strategic growth coming from prime products where, we're going to not add products which are not going to be profitable, but products which really, utilize the capacities, etc., really well. So as a result of that, the first thing is our operating leverage is going to go up. We're going to be getting more contribution out of our existing plants. That should help EBITDA margin improve. Second of all, we should also see through other measures like backward integration as well as, strengthening our control on the manufacturing. We should see overall improvements in margins as well. The last thing I can quickly say is we've maintained in the past that our aspirational number has been 20% of EBITDA, but that's been a number that is largely going to be determined by how the business pans out. So we are, steadily seeing progress in that extent. And I think as growth comes through different businesses, we could see, a certain level of variation on that. But beyond that, we think it's difficult for us to give more specific guidance.
No, that's helpful, sir. I'll join back with you. Thank you.
Thank you very much. Before we take the next question, we'd like to inform participants that in order that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. We take the next question from the line of Raj Rishi, who's an individual investor. Please go ahead.
Yeah, hi. What's the capacity utilization presently?
Capacity utilization.
So, I mean, on an average, we would say, for the whole organization, we would be around about 70 to 75%, but this varies from site to site, as well as production block to production block. So right now, Unit 3 is the lowest in terms of capacity utilization. Unit 1 is probably on top, and Unit 2 is in the middle.
Okay. And any comments on US FDA status regards Unit 3?
Well, it's a continuous process, so we are continuing to file Unit 3 as an additional manufacturing site across our DMFs, and we don't anticipate any issue in terms of Unit 3 being able to supply to US or Europe or any of the other markets that we already supply to.
Thank you. The next question is from the line of Sunil Kothari from Unique Asset Management. Please go ahead.
Thank you very much. Thanks a lot. Sir, my question is basically currently API producer is getting some extra advantage of demand locally and internationally. So we being a pure API player mainly other than this CMS. So are we getting any advantage of those additional opportunity or not? And if not, then what is our strategy? That is my first question. And second is, we have very low ROC. So what is our aspirational ROC? That is my 2 questions. Thank you.
So maybe just try to give a brief response, and then I'll ask Suchet also to share his perspective. I think with regards to the Chinese business, you're absolutely right because of the trade situation with China. There has been, I think at least from the feedback I've been getting from customers, we've been hearing from various fronts, both on CMS and GDS, there's been a greater focus on India, and consequently there's also been a lot of interest in Neuland because we tend to be one of the few pure play established players with a very strong track record. However, that has not yet resulted in material improvements in our business. We continue to see a steady growth in our business, but we believe that over the long term, this should help us. It will help us obviously in the specific products or the technologies we are strong in, but as we keep making investments and we keep adding the right kind of products, it should help us grow faster as well. But it's not very clear at this time. I'll just pause here. Let Suchet also respond, and then we'll also answer your second question.
Well, I think the only thing we would add to it is that there's definitely a trust deficit for companies that were buying out of China, and it's very clear to them is that companies out of India, as long as they can supply and meet that demand on time, was a more reliable partner long term. So we're definitely seeing the evidence of that in our business. It's also one of the reasons where, in spite of being hit with the pandemic and the uncertainty because of the COVID situation, we never slowed down on our capital deployment to increase our capacity so that they're prepared to take on the opportunities. So we're definitely seeing that in the numbers and the consistent growth demonstrated by the organization, and we will continue to do so.
Mm-hmm.
And on the ROC, I think we're mindful of the fact that the last 2 years the ROC numbers have been low, but I think back in 15-16 it was around 18.5%, 16-17 if I recall it was around 16%. Going forward, we expect to see a good improvement in our ROC because of the reasons that we've been talking about. Better performance, better operating leverage, and as a result, we being able to deliver more from our plants, being able to better utilize our assets. So while it may have been historic, like a recent, maybe a challenge in the last 2 years perspective, we believe going forward it should be something that our business will yield attractive ROCE.
Thank you. The next question is from the line of Viraj Mahadevia, who's an individual investor. Please go ahead.
Hi, congrats to the management. Encouraging set of results. Saharsh, I had a question. On page 21 of your presentation, you referred to the commentary saying adding capacities for backward integration and new business. Can you elaborate a little bit on this backward integration? How much of your overall product suite is already fully backward integrated, and are we now going to 100% where we completely are backward integrated in all products and cut off dependence on China? And secondly, can we expect margin expansion, gross margin expansion as a consequence?
So I think on this question, I think it's very important. I think backward integration is something that we are looking at very carefully. I think especially since the China situation erupted a few years ago, and we had, one financial year in specifically where we got stocked out on levetiracetam, and we had, a huge financial impact. I think since then the organization has made a strategic move on, de-risking ourselves. And as part of the de-risking strategy, backward integration has been a key part of that strategy. So even, I can share the broad numbers, and maybe Suchit can throw more color on this, but compared to 3-4 years ago where we were buying maybe 45-50% of our raw materials from China, today we are maybe at about 20-25% of raw materials from China. And not all of that has happened because of backward integration, but some of it has happened because of our ability to find local sources, to be able to do technology transfers, to be able to integrate them well into our supply chain. But yes, in certain cases, especially where the products are very important and the starting materials are complex, for example, Sabam for levetiracetam or some of the other starting materials for our CMS project, we have intentionally used our Unit 3 for backward integration. And we will continue to use that strategy where it makes sense. What we don't want to do is blindly backward integrate on all our products, because that is something necessarily may not generate more value or more margin going forward, especially when you have, you're seeing a surge in good, reliable Indian intermediate and starting material suppliers.
Understood. Fully appreciate that. So I think it's an important make versus buy decision. And if you can buy it at a reasonable price, then no need to invest and integrate. But would you say your RM that you referred to, 25% sourcing from China, will come down to somewhere in single digits over the next year or two as you backward integrate in more and more products and consequently expand gross margins?
Yeah, that's our target actually. So as you were saying earlier, our strategy is not to completely backward integrate, but actually integrate good, reliable partners. Right. And as long as we're able to ensure that, we feel like we've achieved the objective. So our goal over the next 12 to 18 months is really go down to less than 15% in terms of the materials that we procure from China. Not that we don't want to have sources out of China, but also have an equally robust source outside of China.
Understood. Can I ask another question regarding peptides? Sure. Or should I get back in the queue?
Maybe it's better to get back in the queue, because I think they're saying that we have a long queue. You can, we'll come back to you again.
Okay, I'll get back in the queue. Thank you. All the best.
Thank you. The next question is from the line of HR Gala from Finvest Advisors. Please go ahead.
Hi, sir. Congratulations for reasonable good set of numbers. I have got two questions. One question is, as far as your CAMS is concerned, each opportunity is probably, of approximately what size in terms of the value that you can fetch over a period of the lifetime of the project? That is first question. And second question is, if we look at our last 5 years performance, our revenue and profit have grown at CAGR of just 10%. So next 5 years, Can you give us approximate indication that what kind of growth do we expect? As you have always said that your 13-14% type of EBITDA margin will grow to roughly say 20% in next couple of years because of change in the product mix. So how do you see this equation working for the next 5 years?
See, on the CMS business, we have, as we provided the information in our slides, we have a wide number of projects which, as they become commercial, they give us annual revenues. Today, we are seeing projects which give us as little as 5 crores per year on a stable commercial revenue of 5 crores per year, to molecules which are giving us, maybe 50, 60, 70 crores a year. We do expect some molecules to be bigger blockbusters, so maybe they could potentially give us maybe 100 crores or maybe more. But they'll continue to be a wide variety of products in this portfolio. I think overall what we've said and what we've maintained, and this is to maybe answer your second question also, we've said this in the past, is that we expect this business over time to grow at about 20%. It could be give or take, they could be quarter on quarter, they could be year on year volatility as well. But that's the expectation we have going forward. We feel a lot more confident about the business today than say 4 or 5 years ago, because we are at a bigger base. Today, we're, at 200 crores a quarter, we are at a 800 crore base. Versus, maybe 3 years ago, we were a 500 crore company. So I think we do have a stronger base. We do feel, that over time, as I also answered the gentleman earlier, maybe aspirationally trying to get to a 20% EBITDA and having a growth rate of 20% is something that we could share. But, this is not really guidance, and, these numbers are, just more to give you a broad sense of our outlook. And I would probably just leave it at that.
Thank you. The next question is from the line of Vikrant Kashyap from Kedia Securities. Please go ahead.
Sir, good evening and congratulations on a very good set of numbers. Sir, I have just one question. Can we consider this performance as a base performance, and do we expect to improve upon from here? And if yes, then what will drive the future growth?
Yeah, I think, Vikrant, it's definitely the performance was in line with our expectations, and I think as it stands today, despite the challenges of COVID, we think that we are in a good, fortunate situation. So we think it is a reasonable base, only because there are no exceptional items that have contributed to the business of this quarter. But I do expect, quarter on quarter volatility, so there could be some ups and downs as well. And I'm sorry, what was your second question?
And if you improve upon from here, what will drive future growth? Which segment? Where do you see potential?
I think a lot of the growth will come across the 3 segments, and not just saying this to be politically right, but we do have products and growth coming from the prime segment. Products like levetiracetam, levetolol, mirtazapine, they continue to do well. So on the prime segment, they will do well. On the specialty side, there are exciting products like the sterile product that Suchet was talking about, other new products that we are adding. And of course, the CMS, we've talked a lot about CMS, because we are also expecting a lot of projects to get commercialized in the next 2 years in the CMS front, and some of these projects could be really big. However, we also stay guarded, because until the projects do become, the drugs do become commercially successful, it may not necessarily translate into API business for us. But I think that's what's going to drive the business, and whatever business we are pursuing right now, these are all likely to improve our margins. We've been focusing on improving our margins even for prime through cost reductions. So therefore, I think going forward, the base that you've seen in this quarter and last quarter, I think will be a decent base to benchmark, and I think growth will come on top of this.
Thank you. The next question is from the line of Pritesh Vora from Mission Holding. Please go ahead.
Hello, sir. Thank you very much. for this opportunity and congratulations for a good set of numbers. Can you tell me how the growth will materialize? You highlighted GDS as well as the CMS. Where do you think which business will, over the next 3 to 5 years, where the growth will materialize from?
Yeah, I think Harsh was elaborating on this earlier, but as we've mentioned in previous calls, there's not one segment versus the other that we are emphasizing. We believe that our prime API segment continues to grow. Our strategy, of course, is different across the segments. For the prime API business segment, our strategy is to add new customers for the market penetration, increase Neuland's market shares, across the global markets. For the specialty API segment, it's always been the focus has been on technology, patents, supplying sterile API, complex APIs, where we don't expect too much competition. And obviously, on the contract manufacturing side is where we also see a huge opportunity. And we've spent the last several years building capabilities to be able to consolidate our position in this market as well. So as we see it, we expect to continue to maintain focus on all of these segments, and we expect all of them to grow and contribute to the top as well as bottom line.
Our aspiration for 20% EBITDA margin, because currently our margin is somewhere around 13-14%. So how do you bridge that 20% EBITDA margin aspiration? Which are the products which will give you that kind of a margin?
See, our margins recently have been at about 16.5%. That's what we've done in Q1. That's what we did in Q4 of last year. So I think going from 16.5 to 20% will happen as the CMS business as well as the specialty business continues to grow, because those are two business segments which have high profit margin. And cost reduction has been a big focus for us, especially in the last 12 to 18 months. So that should also help us sustain and grow on these margins going forward.
All right, sir. Wish you all the best. Thank you.
Thank you. The next question is from the line of Sandeep Shah, who's an individual investor. Please go ahead.
Congratulations, sir, for a wonderful set of numbers. I have two questions. First is, how many work days did you lose in the quarter gone by? So, were they substantial or were they insignificant? And my second question is taking a cue from the slide which shows the business growth strategy looking forward. And you mentioned here that you want to augment capacity and also leverage your long-standing relationships with leading generic and innovator companies. So could you throw some light on this? Thank you.
Yeah, I think in terms of working days, we would have lost, I would say, about 15 days in total. In Q1, this was like a complete loss of work. Obviously, because of the dip in manpower and a staggered increase in manpower, it was spread over a much longer time. However, it would not be fair to connect that to the performance in this quarter, because in several places we were able to recover from the loss in those working days. In some places, we'll probably recover it over Q2 as well as Q3. And in terms of the overall strategy, I think our strategy has always been clear. We are a pure play API company. We've had an impeccable record with the US FDA. I was just mentioning earlier that that will continue to be a focus area, and we do that by being always paranoid that anything could go wrong, and therefore we keep a very high level of awareness. So our goal going forward is to continue to grow the prime API segment by getting more customers, increasing our market share, continue to add capabilities on the specialty API side, as well as a huge focus on the contract manufacturing side. That's our strategy going forward.
Thank you very much. Before we take the next question, we'd like Mr. Pingley to make an announcement.
Yeah. I think good evening, friends. I think there are still about 25 people in the queue. We just like everyone to ask a question, so we just restricting it to one per participant. So please ask your most important question, then come back in queue again, please. Yeah. I think please do cooperate because there are 325 people in the conference and 25 people still waiting in the queue, and we don't want anyone to go without asking a question. So just restrict to one question. I mean, don't ask three questions in one, just one question, and then come back in the queue again. So, yeah, thanks.
Thank you very much. We take the next question from the line of Mr. Mukesh Prajapati, who's an individual investor. Please go ahead.
Yeah. Congratulations, sir, for wonderful set of numbers. First is, I just want to understand about the peptide commercialization, which we are expecting, I think, by August, September. Can you throw some light on that, sir?
We have peptide projects in our pipeline as part of the 76 projects that we've shown in our table. Right now, we don't have any commercialized peptides, but in the future we may have peptides. But at this point, we don't have enough clarity, and as we would not be in a position to give any specific guidance on what will get commercialized when. I do also want to mention that we have 3 peptides which are under development for the generics business on the GDS side. Those peptides we anticipate to file DMFs in the next 2 years. So as we do that, those products would be commercially available. So that's kind of what I would share on the peptide front.
Thank you. The next question is from the line of Keval Ashar from Investment Options. Please go ahead.
Thank you, sir, for giving the opportunity. I'd like to ask a question that what are the capex plans over the next few years that we have?
So, as we mentioned in the earlier call, the capex for the year would be generally around 45 crores towards maintenance capex, and for the year as a whole, we expect it to be around 70 to 80 crores.
Thank you. The next question is from the line of Rakesh Kumar, who's an individual investor. Please go ahead.
Hello, good afternoon, sir. First of all, congratulations for your robust set of numbers. I have one very simple question. Is this EBITDA margin sustainable for the remaining quarters of this financial year? Thank you.
Thanks for your question, Rakesh. As we were mentioning earlier, this quarter has been business as usual for us, except for there's about 15 working days that we lost because of the pandemic and the disruption of operations. However, Neuland's team, our employees have been great through this whole period. They've been very committed and continue to be committed, and therefore, notwithstanding any significant disruption, we do expect that these margins are sustainable.
Thank you. The next question is from the line of Jay Shah from Navrang Enterprise. Please go ahead. Jay Shah from Navrang Enterprise, you may go ahead with the question.
Hi, congratulations to the management on a great set of numbers. I wanted to ask, actually going ahead with the API chain for the peptide molecules, since a lot of it is based on amines, has the company or the management thought of try and procure it locally, because the amines industry is a very critical industry, and based on how we are focusing the entire product chain on the peptide molecules going ahead, have you thought of doing backward integration in that similar field, or how to procure the products domestically rather than importing them?
Yeah, so I think what you're alluding to is amino acids, which form the base ingredient of peptides. I think today amino acids are naturally occurring as well as synthetic, and there are very established companies in China and Japan, some in India as well, which specialize in making amino acids. And today we source many of these amino acids from these companies. Sometimes if there's a complex amino acid, we make it in-house. But it's not really a strategy to backward integrate and make those, because that's a very different infrastructure and knowledge base needed for that business.
Thank you. The next question is from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah, hi. Good evening, and thanks for the opportunity. Saharsh, I just wanted to understand this, the PLI scheme which the government has launched. How do you guys read it? And because we are a pure API player, and because of the production-linked incentives, do you see any merit in this scheme for any of the products we could be looking at? And secondly, post the PLI, so players who are opting for PLI, do they actually become competitive versus Chinese, or the pricing wise the competitiveness is still we are uncompetitive to China?
Yeah, thanks for your question. I think that there are about 53 APIs listed under this PLI scheme, and out of those APIs, we have about 4 APIs that we manufacture. However, where we found the possibility of applying this scheme is if we are undertaking any new capital expenditure to make these APIs for the domestic market consumption, then the government would give back rebates to the tune of 10 to 20% of the money spent by the organization. So we've done a thorough evaluation, and right now it's possible that one, at the most maybe 2 APIs could possibly benefit. Not clear is how much volume we could actually sell in the domestic market versus how much would be exported. So the benefit from the PLI scheme is not very clear at this point. We're still waiting for further clarifications from the government.
Thank you. The next question is from the line of Rahul, who's an individual investor. Please go ahead. Rahul, you may go ahead with the question. There seems to be no response from the line of Rahul. We'll move to the next question. The next question is from Palak Agarwal from the Tycoon Mindset. Please go ahead.
Hello, sir. Good evening. I really wanted to ask, looking at our annual net cash number, which is around less than 20 crores, and coupling with the promoter stake, how we are planning to, fund our further capex, and how would it impact our debt to equity?
Palak, you want to answer that? Palak, can you please repeat the question? Sorry.
Yeah. So looking at our annual net cash number and coupling with the promoter stake, how we are planning our funding of capex further, along with the impact of it on debt to equity?
Palak, I think what we are looking at, considering regular maintenance capex, we do have maintained with our own internal accruals. But if there are any capex which we are putting on a capacity expansion with obviously our payback period, we have our own criteria of payback period of about 36 months to 48 months. So in all these scenarios, wherever possible, we use the debt equity mix to make sure that our ratios are intact and in line with the overall requirements. And we don't see much degradation in terms of debt to equity ratios.
Thank you. The next question is from the line of Deepak Mehta, who's an individual investor. Please go ahead.
Thank you for taking my question. Good evening, sir, and wonderful numbers. So my question is that, as more and more companies, especially biotechnology companies, are focusing on corona, so there is possibility their budget is, might get cut down, and it indirectly might hamper our company because we have some of the, biotechnology mid-sized company as a client. Any insights you can give on this, sir?
So far, we haven't really seen any significant change in the demand from our customers. You're right. There are a lot of companies that are focusing on research related to the COVID pandemic, but these are new companies and companies that already had capabilities in these areas. We're really not seeing any biotech or drug discovery and development companies change their focus, let's say, from a CNS area to the COVID situation, because that's the need of the hour. And our demand and interest from those kind of companies continues to be stable.
Thank you. The next question is from the line of Sri Hari C from PCS Securities. Please go ahead.
Yeah, thanks for the opportunity. If I have to restrict myself to one question, then it would be pertaining to your workforce. X of your scientists, I think it's around 700. So can you please give a breakdown in terms of how many are permanent employees, what is the temp force, and has there been any impact as far as the temp force is concerned because of the pandemic, and is there any possibility for a restructuring there? Thank you.
Yeah, so our full-time workforce is actually closer to 1260, and then we have contract workmen on top of that. So as a result of the disruption of the COVID situation or the pandemic, we haven't had any layoffs. In fact, given that this has brought out a lot of uncertainty, even for employees, this is a time where we felt the need to step up and take care of their needs and make sure that we are not causing them any more uncertainty or anxiety than what is already being experienced. So on top of that, as mentioning earlier, there's been tremendous commitment from all of the employees of Neuland during this extremely difficult situation. They've shown up to work even when the company was not able to provide transportation. They've used other modes of transportation just so that they could be here and help continue the operations of the organization.
Thank you. The next question is from Gagandeep Singh, who's an individual investor. Please go ahead.
Yeah, hi. I was wondering if you could throw some light on the pipeline of peptide, and also wondering if you're counting on any particular peptide for the DMF submission.
Yeah, so as I was answering to gentleman earlier, we do have several peptide projects in our CMS portfolio. Many of them are still under development. Right now, there is no peptide which is under the commercialized category for CMS. However, on the GDS side, we do have 3 peptides which are under development, for which we expect to file DMFs in the next 2 years. I can share those names. They're public information. It's linaclotide, liraglutide, and semaglutide. And they are very exciting, and we do expect to see a good part of our growth in the future coming from peptides. But at this point, we're not being very specific about it because we don't see anything very near term. Thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique Asset Management. Please go ahead.
Hi, sir. So if you compare our other expenses, manufacturing expenses quarter on quarter, in absolute terms or also as a percentage of revenue, it has come down substantially. So anything you would like to call out on that? Is this sustainable, mainly on the manufacturing and other expenses?
So if I understood your question, what you're asking us is that you've seen that the expenses have come down or remained stable, and if we believe that that sort of a thing is sustainable. Is that your question?
Yes, because if you compare quarter on quarter from quarter 4 of FY20 to quarter 1 of FY21, our revenues have gone up, but our other expenses and our manufacturing expense has come down substantially. In absolute terms, about 15%, and as percentage of revenue significantly. So is there anything you would like to call out on that?
Not really. I think we do expect, you also have to keep in mind that Unit 3 is also ramping up as well, and that is that will start to add to the revenue stream. On top of that, we're also tracking our expenses very, very closely, expenses which are related to the pandemic as well. And as a result of this whole COVID situation, there were expenses that we would otherwise incur, which we haven't incurred, such as conferences, travel, sales and marketing expenses, without really eroding any revenues. On top of that, we've also seen a better product mix. Therefore, our expenses did not increase proportional to the revenues as well. So all of this has contributed to a better margin, and that's why we expect that it would be sustainable. Thank you.
Thank you. The next question is from the line of Raj Rishi, who's an individual investor. Please go ahead.
Hello. Hello. Can you hear me?
Yes, we can hear you.
Hello. Can you hear? Yeah. What's the sort of asset turnover ratio which you look at for the incremental capex? Hello. Am I audible?
Yes. So your question was, what is your asset turnover ratio? Current asset turnover ratio?
Incremental capex. Yeah, that's right.
Bharadwaj, you want to answer that question?
Yeah. Sorry. The current asset turnover ratio is about 2.48. And going forward, it would be more in line with the same expectation. The ratio would be intact.
Okay. And any fundraising plans, QIP, etc., because the market is giving you the valuation better than earlier. So, any comments on that?
No plans as of now.
Thank you. The next question is from the line of Sajal Kapoor from Unseen Risk Advisors. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
Yeah, so I just wanted to know, thanks for the follow-up first of all. So how do you see the industry structure unfolding for the Indian players as the world is aiming to sort of de-risk their sourcing requirements away from a single supplier, and the potential revival of API manufacturing in the Western world? So what we hear today is that there are many API companies, good quality API companies in Europe and US as well, and they are going for capacity expansion using a much superior technology relative to some of the Chinese as well as the Indian players. So how will that change the dynamics of the API manufacturing over the medium to long term? Thank you.
I think it's a very deep question. So maybe I think both Sucheta and I will try to give our perspectives on it. I think the way we look at it, the API business, I think especially from Neuland's perspective, the way we see it is we produce 75 APIs commercially today, both for CMS and GDS. Today, if you go to Europe and you try to identify how many European CMOs produce 75 APIs on an ongoing basis, you will probably not even get a handful of them. So I think when it comes to the depth of experience in producing APIs, I think companies like Neuland, we've really gone through a lot, and I believe that knowledge is invaluable going forward. You're absolutely right that supply chain de-risking is going to be the way forward. People, pharmaceutical companies don't want to be single sourced, especially if that source is in China. And I think that will help in many ways for Indian companies, pure play API players like Neuland, to consolidate our position and grow. Definitely modernization and usage of technology can play an active role in making our efficiency go up. And I think that is something as a company we are looking at as well. So for example, instead of using traditional vacuum trade dryers, we are moving towards modern drying equipment. We're doing this in a phased manner across all our facilities. That kind of modernization is something that any leading company will have to do, whether you're in India or in Europe. And I think that's something we'll do. Obviously, I think as you probably know, Europe will still continue to be a strong player for APIs. They've traditionally been very strong. And if they invest in capacities, then definitely that could be an alternative to China. And I do believe that the market is large enough that even if there is a threat from the European resurgence, it will not necessarily be detrimental to Neuland or the Indian API industry. Sujit, do you want to share any thoughts on that?
No, I think very similar, really. I think even historically, we always say this to our customers, is that we never position ourselves as an Indian API company with a lower cost base, trying to penetrate the market share. We've always competed based on our chemistry as well as our technology, and that has nothing to do with being based out of India or having lower labor costs or the cost of capital. So our focus continues to be the same, whether it's in contract manufacturing, specialty APIs, as well as our prime APIs, is that we continue to focus on adding capabilities, focus on technology so that we can do APIs better than in the products that we manufacture better than others.
Thank you. We'll be able to take one last question. We take the last question from the line of HR Gala from Finvest Advisors. Please go ahead.
Yeah, I was cut short. My question is, you have guided for about, say, 70 to 80 per crore type of capex. But say in case some opportunities come up in CMS space, will you have to spend something more on that?
I think the number that Bharadwaj had given you is the kind of capex we need for the business that we are seeing in front of us in terms of either order book or contracts or confirmations from the customer. But as a aspiring company that is doing new projects, there will be certain projects that would need capex. So, for example, there might be a peptide project that might come tomorrow that would require a project-specific capex. In those cases, what we would have to do is
Hello. I couldn't hear you, sir. Your line got cut. Hello.
Can you hear me now?
Yeah, now I can hear you. You said about project capex.
Yeah, so what I said is the capex that my colleague had referred to was the capex for the business that is already visible for us in terms of contracts, purchase orders, confirmations, etc. Other than that, if there are new projects that are coming up, say like a peptide project or something that's very specific, there would be a project-specific capex that would be incurred, and we would make sure that we make those investments in line with the guidance that we have for our finance department in terms of the kind of returns, etc., that we'll have. And also, when it comes to very specific project-specific capex, we would also probably negotiate for advances from our customers to make sure that we are not having to fund the entire capex by ourselves.
Okay. What could be the approximate size of those capex plans, project capex? Approximate.
Could be 5 crores, could be 20 crores, could be even like 50 crores. So it could be a wide range of capex. Small capex, we would not typically, ask customers for advances. But if it's a really specialized project, then we would ask for an advance.
Thank you very much. We'll have to take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Again, good evening, everyone. Thanks a lot for all your questions and interest in Neuland. Thanks for being here on this call and for all the questions. It definitely helps us look at our business from your point of view as well, and that's very helpful. I would also take this opportunity to thank the entire Neuland team that has really worked relentlessly with an amazing level of commitment through this disruption, through this uncertainty of the pandemic. And what you see today in terms of our results and ongoing performance is a direct outcome of the commitment of all our employees. So thank you again for the continued interest. Hope we've answered all your questions, and if you have any further questions, you can reach out to us at any point of view, and we'll be more than happy to take and clarify whatever questions you might have. Thanks again, and have a good evening.
Thanks.
Thank you very much. On behalf of Neuland Laboratories, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.